Good morning, grade 11s. This is really not how we wanted to start our first lesson for 2021, but unfortunately, the curveball was thrown and we have to adapt to it. We are going to start with bank reconciliations. I already posted a video from Red Hill College, I think it's college, where they explained, or that guy explained, what bank recon is. Guys, it's really important that you watch those videos as they are directly involved in compiling your exam papers for grade 12. So that's the reason why I'm including those videos in the prep for each topic. Then the other thing is I also added mind action series notes. I really like the way that they explain to you what you need to do and how to attempt these questions. So please go through those notes, make the notes your own. It will only be beneficial for yourself if you go through the notes, if you know what differences you can find. Yeah, so please. Okay, so here's the slideshows that I promised. I'm going to start touching on things that are important, and after you watch this, you're going to do task 3.5, where you just have to go and calculate the amounts, the little star amounts. The reason why I gave you this task is because I want to ensure, or I want to know that you know where you're going to debit, when you're going to debit and when you're going to credit regarding your bank statement. Remember, your bank statement is the mirror image of your bank account. So for instance, if I debit in my bank account, I'm going to credit in my bank statement. So I just want that to make a little bit more sense for you. So let's quickly start with things that you need to know regarding your bank recon. I'm going to touch on some of the mind action notes as well. It's open here next to me. So please print them out, make them your own. It's only going to help you. And so let's start on this slide. If you see here, okay, you've got your current bank account. Your current bank account, the balance of this account will change as often as deposits and payments are received or made every day. So for instance, if I deposit 100 Rand into my account now, the balance is going to differ, obviously. If I go to Nel Park and I buy bread and milk and some ice cream for the kids, then obviously it's going to have an influence on my bank account again because I'm making a payment. So it can change, or it changes with every deposit that you make and with every payment that you make. Now, types of payments that you can receive or can make is an EFT payment, which is electronic funds transfer. You can go to the ATM and withdraw money. And then you've got debit orders and stop orders. Please make sure that you know the difference between these two. Here you give authority to a third party to take an amount, and here you give instruction to the bank to pay someone on the same day. So for instance, this one I would use for my gym fees, and this one I would use for like your domestic workers or something like that. And then checks. I don't think we use checks as often anymore. A lot of places don't accept checks. There's a reason why. I'm going to show you now. Okay, next slide. Bank statement. Now, what is a bank statement? I know that for some of you, this might be like you already know what it is, but it's important to go through each and everything so that you've got a clear picture. So here, a bank statement is a copy of your bank account records. So it will state every deposit that you made, every payment that you made, the interest that was charged on your bank account, the bank charges that were charged on your bank account, and here we can go here. Your bank charges for obviously your bank charges for the service that they provide you, and this is known as bank charges. So just make sure that you know that the bank statements is from the bank's point of view. So if you go to your notes in mind action, page 11, and the first page is, you will see that they broke it up for you. It's your point of view, so the business point of view and the bank's point of view. So it's important to remember that the bank statement is going to be from the bank's point of view. Remember, if I deposit money into my bank account, the bank is owing me money. So I'm seen as a creditor from the bank's point of view. So I will have a credit balance on my bank statement, which is still an asset for me, okay? Because they are owing me that money. I'm a liability to the bank, but it's an asset to me. Then if I've got a credit balance on my bank statement, I'm going to have a debit balance in my books. So it's the mirror image. So whatever is happening in my books, the opposite will be happening in the bank statement. So let's quickly go here. These charges, these bank charges, I'm not going to find on the credit side. Now remember, if I look in my books, in my business books, if I receive money, you bring it in on the debit side. If I give out money, you take it out on your credit side. Remember, bank can be an asset or liability. So you must remember when you're going to say donkey or when you're going to say that other words that we're not talking about. But in the banks, or from the bank's perspective or their point of view, if they charge me bank charges, then they're going to write it on the debit side of your bank statement. And every time I deposit money, they're going to write it on the credit side. Okay, just remember that bank charges, you need to go and add in your CPJ, and you have to bring it in into your bank account. I will explain that a little bit later, more in detail. Okay, so there's some terminology that you need to know and definitions. So overdraft. An overdraft is where you sign an agreement with the bank where they give you money ahead. So say for instance, you only receive your income on the 15th. I know that most brokers do it like this because they only receive their commission on the 15th, but all of their expenses go off on the 30th of the previous month. So they normally sign an agreement with the bank where the bank gives them like an overdraft, so they can withdraw more money than they have in their bank account. So an overdraft, so all their debit orders can go off, and then on the 15th they just correct that amount. So in other words, they allow you to let your bank account go into the red, if that makes sense. So overdraft, they give you a little bit more money, so it's almost like a credit card but on your check account. Okay, the next one, this is really important, guys. Please make sure that you know this. They do ask questions like this in matric as well, or in grade 12 as well. I am going to ask you questions like this in your grade 11 tests and exams, so please make sure that you know this. Now remember, I said that we don't use checks that often, but they still like asking check payments in your exams, because checks can you've got different types of checks. So, and yeah, jy kan vasgevra word. So number one is a stale check. It is older than 6 months. So once the date has passed, the bank will not pay the check should it be cancelled. So say for instance, I go to Zayan and I say, Zayan, I want to buy something from you. I'm going to pay with a check. So now I paid Zayan with a check. Now for some reason, Zayan forgot about the check. He still has 6 months, okay, in which he can go and deposit my check into his bank account. So say for instance, I wrote out the check to him in January. Now it's already July. So 6 months has already passed. If 6 months has already passed, then Zayan can't go and bank the check to get the money into his bank account, because 6 months has already passed. So then it's a stale check. There's no way that the bank will transfer the money from my account to Zayan's account if the check is older than 6 months. 6 months. So you must remember, so let me just go here between me and Zayan. So I made a payment to Zayan. This is my books now. So I will have to go and reverse the check in my CRJ, because remember I already bought it in my CPJ. Now I have to go and reverse it in my CRJ, and I will have to write Zayan a new check. Zayan, on the other hand, if he already accounted for the check, he would have bought it in his CRJ. So if he had to remove that check, he will have to remove it out of his CPJ. I hope that makes sense. Then the next one is a post-dated check. So say for instance, I go to Zayan and I make a payment to him, and I tell him, okay, but this check you can only deposit in July. I don't have money in my account now. I'm buying the stock from you in January, but please, this check you can only deposit in July. So in order to make sure that it's not a stale check, I would write a future date on that check, ensuring that he can only deposit or withdraw that amount, not deposit, he can only deposit it into his account, withdraw from my account on a certain date. So a post-dated check is where it's a future date. Okay, so if I receive a post-dated check, so now I'm in Zayan's shoes, he just received the post-dated check. He is not going to do anything with that check. He's just going to keep it safe, and then when the date comes, when that date comes, he will go to the bank and he will deposit it. Okay, now Zayan can also receive another type of check this is now when your debtors comes and pay you, or someone buys from your shop. Okay, so a dishonored check, it will be marked RD, and you will get quite a lot of this on your bank statements. I even saw quite a few of them in the matrix exam paper for last year. So a dishonored check means that the bank was not able to collect the money from the drawer's bank account. So the drawer is now Zayan's client. So if I went and I gave Zayan a check, so Zayan went to the bank, he deposited the check. Now the bank says, sorry Zayan, we can't give you the money because we can't withdraw, or we can't draw that money from whoever gave you the check's bank account. So you already accounted for it in your CRJ when you receive the check. So when I have to go and take it out, I have to go and take it out in my CPJ to reverse the CRJ entry that I made. And if you allowed any discount, you have to go and reverse it in your general journal. Okay, so these things are really important. You are going to get a lot of these types of checks in your bank Recon. Okay, now the next thing is that you can interest. You can either receive interest or you have to pay interest. So when I'm receiving interest on your current bank account, that is where I've got a favorable bank balance, and now the bank is paying me interest because they are actually keeping that money. So you're receiving interest on your bank account. So interest received, you will also find on your bank statement. Interest paid, this will normally be on an overdraft or unfavorable bank balance. So for instance, even your credit card, if it's unfavorable, the bank will charge you interest on it, and even an overdraft you pay interest on. And this you will also find on your bank statement. Just make sure that if I'm paying in my bank or on my bank statement, if I made a payment, so interest paid will be on my debit side, and interest received will be on my credit side. So just make sure that you've got that. In my books, the interest received will be on my debit side, and the interest paid will be on my credit side. Okay, so here we get to the nice part. How are we going to record, or how are we going to do the reconciliation process? Guys, you will have to go and make this theory your own. Remember, I told you that in class as well last year. I can explain to you till I'm blue in the face, but if you don't go and sit down on your bum and make this information your own, you're going to find it difficult. Okay, so what does a reconciliation mean? It means to work out the difference and get reasons between two things which do not agree. We will work with your bank statement and your bank account. And remember, your bank account is your cash journal, so all your records. But mainly, you're going to take your bank account in your general ledger. You're going to work with that. You're going to remember your cash journals like a CRJ and CPJ, you take to your general ledger and you put it into your bank account. So that's why I included here. Okay, so these will agree. These two, so mainly your bank statement and your bank account, will never agree due to time delays. We make deposits and payments that the bank only knows about later, and this is the reason for the bank reconciliation statement. So, for instance, if I go to Nelbog and I just use my card and I didn't take the slip to my accountant, she's not going to know about the purchase that I made at Nelbog. So only when she receives the bank statement, she's going to say, oh, but you made a payment at Nile Park, and she will have to bring that into my books. So those are reasons why it may differ. So there are some other reasons as well. It will be on page 13 in your mind action. We've got checks that you issued already. You brought it into your books, but the bank hasn't. It hasn't. My English really got bad during this holiday. It didn't go through your bank account as yet. So if I went and I bought something from Zion, I'm already bringing that check into my CPJ as a payment, but Zion didn't go to the bank as yet to deposit the check, so the bank doesn't know about that check. Okay, I hope that makes sense. Debit orders, stop orders, direct deposits into your bank account, charges levied like your bank charges or interest and interest charged, checks received and honored by the bank, and when your deposits are not showing in your bank account as yet. All of these things that I quickly mentioned, you can find in the notes that I posted yesterday. Okay, so how am I going to do this now? Ma'am, you've got us really confused. We don't know what to do as yet. So the first things first, you're going to compare your bank statement to, and you're going to tick items that agree. So first you're going to take your bank statement, and you're going to take your CRJ, and you're going to highlight all your credit. Now remember, it's going to be on your credit side, all the deposits that you received. On your bank statement, it's going to be on the credit side. In your CRJ, you're going to tick. So you're going to highlight all the credit balances in your bank statement, and you're going to agree that to your CRJ. If there's one that you haven't received, you make a colleague next to it. The others will have tick marks. If there's one on the bank statement that you don't have in your CRJ, you're going to make a colleague next to it, because then you know you still have to bring it into your books. So maybe a tenant paid directly into your bank account and you didn't bring that into your books through your CRJ. So then you're going to bring it in your CRJ. The next step is your CPJ. We always start with your deposits because they are less, and then you go to your CPJ. You're going to compare all the debit balances that went through your bank statement to your CPJ and make sure all of them agree. If they don't agree, it's not the end of the world. You make colleagues, so you remember which ones did not agree. Then you're going to take your salary journal and you're going to compare that to your bank statement. And then you also need to take your last month reconciliation statement. Okay, number 2, items not ticked off in the credit column of the bank statement. You need to process or make entries for it in your CRJ. balance is not ticked off in your debit column in your bank statement, you're going to account for it in your CPJ. So then you have to bring it in. So the total of your CRJ and CPJ, you're going to post to your bank account in the general ledger. So nothing really changes here except you're agreeing your CPJ and your CRJ before taking it to your bank account in your general ledger. Okay, now we're still busy with the procedure on how to account or how to do the reconciliation. Now, if I've got items that I did not tick off in my CRJ, I'm going to bring it in my bank reconciliation statement. So I've got items in my CRJ, they are not on my bank statement. I'm going to bring it in on the bank reconciliation statement. So I will show you where you're going to do that. Relax, Zayan, before you say anything, Anas, just relax. Okay, CPJ and CJ, SJ. If I've got transactions here and it did not appear on my bank statement, I'm going to bring it in on my bank reconciliation statement. And then your last month's bank recon, you're going to bring it in this month's bank recon. Okay, so before I go on, remember, I can go to, let's take salaries. Salaries is a really good example. I maybe already paid my salaries, but a bank statement normally goes from the 13th of January till the 13th of March. Oh, no, I'm lying to you. 13th of January till the 13th of February. Okay, so can you see why some of the transactions that happen during the month will not be part of my bank statement? So this is why we do it. Okay, so in last month's bank recon, the salaries that from last month may be the reason why I'm not balancing or why my bank recon did not balance, and now maybe it went through on this bank statement. So it's really important to make sure. Okay. So this is your bank reconciliation statement. This is done from the bank's point of view. They don't know about outstanding items. Guys, I can do whatever I want. You need to learn this format. So the first thing is your debit or your credit balance as per your bank statement. That you're just going to get on your bank statement. So the last balance that they give you, this is what you're going to write in. Either on your debit side, if it's an overdraft, or your credit side, if it's favorable. Now, you're going to credit outstanding deposits. So everything that is not on your bank statement, but it is in your CRJ, you're going to list it under this heading. And then you're going to credit it. Remember, it's from the bank's point of view. So deposits will be credited. Now, if I made payments with checks and it did not go through my bank statement as yet, you're going to debit your outstanding checks. So these are the checks that are written out during the month, but they haven't went through or they're not on my bank statement as yet. Then I'm going to debit them. And then here, this is the most important part. You're either going to debit or credit the balance as per your bank account. You're going to debit it if it's on the debit side in your books, and you're going to credit it if it's on the credit side in your books. These two totals has to agree. Okay. And that's it. Guys, I know it's confusing, but I promise you that, let's just get something on here. I know it's a little bit confusing and like information overload at the moment, but I promise you as soon as we start doing the exercises, I will also try to make you a video when we're actually marking the work so that you can see what I'm doing. So from my side, I will really try to explain and do my best so that you can understand. This is just like theory overload. You're going to do task 3.5. This is just so that you know on which side does the bank account plus and on which side does the bank account minus from the bank's point of view. So on your bank statement, where does it plus, where does it minus? It's a really easy exercise. It's really not that bad. Just make sure you know where it needs to plus and where it needs to minus. I hope that you have a lovely day, and thank you for listening. I know this might seem like information overload, but I promise you it will get better. Okay. Just give me a moment while I'm going out of everything. Okay, bye guys.